We are about midway through the trading day on this Wednesday, and it's time for a quick reset here on Stock Solutions. I'm Grant Mercer. The tone right now, cautious but orderly. Traders are juggling fresh labor cost data with mounting speculation about who will run the Federal Reserve next, and that combination is keeping an eye on the bond market even as stock indices grind sideways. Let's start with what's really moved the needle since the last hour. The latest read on wages and benefits. According to reporting from MarketWatch, worker pay and benefits rose again in the third quarter and still outpaced inflation, but that advantage is clearly narrowing as the jobs market softens. On the one hand, cooling wage growth helps the Fed's inflation fight and could support the case for easier policy down the road. On the other, a deteriorating labor market raises questions about consumer strength as we head into 2026. That tension is exactly what equity and rate traders are trying to price in right now. Layered on top of that, you've got the political overhang around the next Fed chair. MarketWatch notes that Kevin Hassett remains the front-runner to succeed Jerome Powell, even as his prospects have dipped a bit, and former President Trump says the decision may not come until next month. Any shift in perceived policy bias at the Fed, from more hawkish to more dovish or vice versa, can reprice everything from long-duration growth stocks to industrial cyclicals, so the uncertainty itself is an area to handle with care. On the strength side, one pocket that keeps showing up in today's flow is industrials. Coverage highlighted by MarketWatch points out that industrial stocks have been red hot this year, but it's very much a stock picker's market within that group. For traders, that typically means dispersion. The winners and losers inside the sector are spreading out, which can create opportunities for those drilling into company-specific fundamentals rather than just buying the whole basket. Another theme bubbling up in the background is labor and HR practices. A MarketWatch piece on job ads that may be discriminating against workers over 50 is a reminder that legal and reputational risk around hiring and diversity remains front and center. Investors will be watching whether any big employers get pulled into regulatory or PR storms here, especially in consumer-facing industries where brand damage can hit the multiple quickly. In terms of under-the-radar stories, a couple names I'm watching in the background could matter more if conditions line up. One is the EV and autonomy space. MarketWatch reports Rivian is gearing up for an autonomy and AI day, with questions about whether it can capture a similar AI halo in its stock price that Tesla enjoys. If the market mood shifts back towards speculative growth and AI narratives, that kind of event can become a volatility catalyst, even if only for a short window. Another quieter storyline is in restaurants and retail. Cracker Barrel, according to MarketWatch, has already walked back some remodel and logo changes after a social media backlash, but now faces unique and ongoing headwinds in the business. Traders in the consumer discretionary space often look at these kinds of mid-cap names as real-time temperature checks on middle America spending and brand loyalty, not just as one-off stories. Looking into the next hour, the focus stays squarely on rates and the Fed narrative, how the wage and benefit data feed into expectations for policy in 2026, and whether any new headlines around the chair search hit the tape. I'll also be keeping an eye on how industrials trade into the afternoon and whether even AI-related headlines start to pull more speculative capital off the sidelines. Remember, this is information and education, not personalized financial advice. As always, I'll be here to keep clarity through the chaos of these markets. On behalf of Stock Solutions, I'm Grant Mercer. Stay sharp, stay steady.